All right, good morning and welcome to the final day of the Wharton Alumni Climate Change Conference. My name is Arthur Van Bentham and I'm an associate professor in economics at the Wharton School. My own research and teaching are in the areas of environmental, climate, and energy economics, and I'm delighted to see how passionate our alums are about these defining issues of our times. So the topic for today is climate change investment opportunities. And let me say there's many of them. Now, before I announce today's speakers, I wanted to take a moment to reflect on what has happened at Wharton in the areas of business, climate, and environment over the past few years. And one thing to note here is that on the student side, demand has just been skyrocketing. We are now offering an undergraduate concentration and an MBA major in business, energy, environment, and sustainability, and the enrollment is growing fast. And then on the research side, it's really exciting to see that more and more Wharton faculty, both new hires but also existing faculty, are now doing cutting-edge research on climate. So we have professors in accounting, economics, finance, legal studies, management, operations, and statistics, all engaged in climate research. And we showcased this recently in our Wharton Climate Prof event, where faculty did 5-minute mini presentations on their research. And I'm going to post the link in the chat in case you want to see a few of those research pitches. And then finally, on the outreach side, many of us are actively engaged in discussions and training sessions with companies and government agencies to elevate the impact of our research beyond the walls of campus. So these activities have now come together in Wharton's Business, Climate, and Environment Lab, which I co-lead with Professor Sarah Light. We're part of the Wharton Risk Center, which has become the go-to place for all things climate at Wharton. And Caroline Kuski, the center's executive director, will tell you more at the end of today's session. And now, without further ado, let me introduce today's keynote speaker. Shiv Kempka is vice chairman of Sun Group, a multinational private investment group, and the executive chairman of the Global Education and Leadership Foundation. He has devoted his life to the practice and cultivation of ethical leadership. So in 2006, Mr. Kempka founded this organization to nurture ethical, altruistic, and decisive leadership in young people across the world with a vision to create a new generation of selfless field leaders. Mr. Kempka holds an MBA from the Wharton School, and Shiv, the floor is all yours.
Thank you very much, Arthur. Appreciate that. And it's really a pleasure to be back at Wharton virtually. I did my MBA, but I must add that I also did a master's in international studies from Penn at the Lauder Institute. And I'm a very proud Lauderite as well. And I focused on Latin America. And even in those days, we were concerned about the Amazon and what was happening in terms of deforestation and so on. So it's really a pleasure to be on this call with all of you. And I wanted to really talk about, from a very small point of view, our own commitment as a family and business to the space and how it's changed. We started out many years ago as a mining company, investing in oil and gas, hydrocarbons, mining. And really, it's been remarkable over the last couple of decades, really since the Rio summit, when my brother attended Rio and became passionate about the whole climate change issue and led the family towards redirecting all of our business activities towards the climate direction. I will ask my colleague to just share some slides, if that's possible. Are you sharing the slides? We as a family business have 4 divisions. We are in natural resources, which are now focusing on battery technology, minerals and metals. We are in the second area we are working in is what we call the energy transition group, which is focused on new energy activities. The third activity we are working on is advanced electronics for smart cities again, very much focused on the energy transition. And finally, asset management, where we have an arm focused on venture capital, private equity, again, focused on the energy transition. So, and on new technologies for climate mitigation, for carbon sequestration, and many other things. We're really very focused on this whole thing as a group. And then we have a foundation, which is very active in what we do as well. We don't seem to be able to share the slides for some reason. Is it possible for us to share some slides?
We're
okay
on that.
Arthur, we don't seem to be able to share any slides here. So
I'm asking the risk
there
center.
we are.
Can you work
Perfect,
on that?
perfect.
Yes,
perfect.
it's working.
Thank you. Perfect. So, I think we all understand that we have little time, and the world is in a way a burning platform. We need to all put our shoulder behind trying to solve these issues. And I won't go over the issues because I think the audience knows well the types of issues we're facing from a climate challenge point of view. And COP26 is coming up in Glasgow in a few days from now. And I hope that the world will continue to move in the direction of really trying to solve these problems. What have we done as a group? I'll just take you through some of our main initiatives. And so we created a renewables business many, many years ago, about 20 years ago, to invest in solar and other renewable technologies, which we have continued to invest in and continue to do, from ground-mounted solar to rooftop solar, to investing in solar technologies, solar robotics, and many other things. And it remains a core focus of what we do in India and in other parts of the world. We then started to focus on mobility, and we've built a company called Sun Mobility, which my brother has led, which we started in 2017 with one of India's leading EV entrepreneurs called Chetan Maini. And that business today, Bosch, the German company, bought 26% of our business about a year ago. And just recently, yesterday actually, Vitol announced an investment of $50 million into Sun Mobility. And the idea is to take the strategy and the technology global. It's a technology that uses battery swapping as a technology for shared mobility, and is very energy efficient and low cost, and of course, very climate friendly. We recently made an investment in the world's leading solid state battery company. Many of you may have heard of QuantumScape, which was backed by Bill Gates and Volkswagen and went up to a ridiculously high valuation of $50+ billion after its listing at about $3 billion about a year ago, and has now come down to about $9 or $10 billion. We've invested in, we think, a company that's several years ahead of QuantumScape in terms of operationalizing the technologies for solid state batteries, which we think will broadly replace lithium-ion batteries over the next decade, at least 30 to 50%. And this company is a Taiwanese Singaporean company, and the company is looking to build plants in Europe, the US, and around the world. So again, very interesting investment. We led a $225 million investment round into the business, and will continue to lead the business. The business is going to get listed in the US within the next 6 to 8 months is the plan. After we invested, we've had a number of other investors, including some car companies, OEMs, that are looking to invest in the business in the next couple of months. Apart from that, we raised a SPAC recently, as everyone seems to have done, a SPAC focused on the energy transition. And we're actually putting together a group of SPACs to focus on the energy transition, because we think the opportunity is a massive opportunity. And I've been in New York for the last month or two, just trying to really understand how we can play a very active and forward-looking role into the energy transition and the whole climate space. Next, please. So on the business side, we're doing various things to really put our shoulder behind the whole climate issues. But really for us, the philanthropy, we believe, can have much more impact. And we are trying to create voice amongst young people. We reached 3 million young people at schools. We started training them on the SDGs, United Nations Sustainable Development Goals, a number of years ago when the SDGs were launched. And that has been an extremely successful program. And with that, we work with other partners like Junior Achievement and many others, Center for Universal Education at Brookings and so on, to really think about how can we get education systems around the world to focus on the climate change issues. With that, we also want to create voice through popular, sort of partnerships. We partnered with Global Citizen in New York to bring them to India. And we had a very large event in India where our Prime Minister attended as well. We raised $6.3 billion for education, gender equality, and water, sanitation, and hygiene, all focused on the UN SDGs and on climate leadership. And we had a huge audience of 100,000+ young people, and we had many young people who remain very active in that movement. More recently, we've created something called Entrepreneurship Sports Generation, which is an ecosystem to bring together young people and people around the world to think of entrepreneurship as sport, because we're concerned about job creation on the planet, and we're concerned about bringing enough people together to create critical mass to solve problems at scale. And ESG is naturally talked about: environment, social governance, and ESG as Entrepreneurship Sports Generation. And we organized last year an event, which the first large virtual event, which had 300,000 entrepreneurs apply. All of them had to fit into the SDGs. Most of them, many of them, at least half, were focused on climate issues. And we curated and gave away about $300 million of prizes. We are very fortunate to now be connected to the United Nations, that has appointed us as, with Project Everyone as the accelerator to the world's to-do list. And with that, we are now hoping to have 1 million entrepreneurs apply this year, focused on the UN SDGs, and to curate and give away about $1 billion of prizes. With lots of partners, we're very pleased. We work closely with Wharton on this as well. And I must say that for me, Wharton was a very, very important life experience. It really changed the way I look at the world. And the Lauder Institute had a very important role in that as well, in looking at the whole world as one family. And I've always been impressed by Wharton's great leadership in these areas. And I'm delighted about Wharton's programs in business, energy, environment, sustainability, and the research effort that Wharton is doing to put its shoulder behind this massive issue of the climate change that will threaten many, many communities around the world. And I think that we all need to do our best to really try and address these issues. And our small way of doing that is the Entrepreneurship Sports Generation. We would urge all of you to look at the website, esgx.global. But if you just Google Entrepreneurship Sports Generation, you'll find that. There's a finals video on YouTube. We had 30 million viewers of that. We have our own TV channel in India to promote this as well, with Reliance, with Geo TV. And we are working with many, many partners around the world, including Young Presidents Organization, Junior Achievement, Arizona State University, Thunderbird, and many other partners, the United Nations, of course, Schmidt Futures, Eric Schmidt's Foundation, and so on, many others, to really support this movement of young people dedicated to using entrepreneurship to solve the problems on the planet. Because we believe in entrepreneurs, we believe that entrepreneurs can change the world. Jeff Bezos, recently, I was at an event where he pledged the second $1 billion of his $10 billion pledge for natural resource conservation and so on. And, shows what one entrepreneur can do. And if you get lots of entrepreneurs working together to solve these issues, I believe, I'm an optimist, an eternal optimist, and I believe that we will be able to do great things. And I'm very grateful for Wharton and the leadership Wharton is taking. I'm very honored to be involved in this in any way I can. So I just wanted to say thank you again, and would be happy to answer any questions. Please do reach out to me. Anyone that's interested, my email is shiv@kempka.com. So it's quite easy to reach me. Please do reach me, and I'll be happy to be helpful in any way I can. Thank you very much.
Shiv, thank you very much for this very uplifting and optimistic speech. And also, I think I echo a comment in the chat. That's a very impressive portfolio of different projects. So thanks for sharing that with us to start the day with. Now it is my pleasure to announce the first panel of the day on the topic of climate change funds. And this panel will be moderated by Kevin Dodo, the managing director at Dahlia Partners, which is a life sciences strategy consulting firm. So Kevin partners with the Boston Consulting Group to establish a strategy for a major university to create a global center to better prepare our nation and the world for the next pandemic. So that seems quite an important endeavor. Kevin is also passionate about tennis. He invested in and he ran an indoor tennis center in Montgomery County, Maryland, was the CEO of Boys and Girls Clubs of Greater Washington, and is also a competitive tennis player himself. Kevin earned his bachelor's degrees in management systems engineering from Princeton and also holds an MBA in finance and marketing from Wharton. So Kevin, it's over to you.
Thank you so much. And wow, this is so exciting. I've had a chance to listen in to some of the panels and presentations earlier this week, and I'm incredibly impressed. So thank you for that warm welcome. We're going to have a really incredibly exciting discussion about climate change funding from three very different angles. And I will share my screen here. Let's see. Okay. Hopefully everyone is seeing this, the title slide. Today, I'm going to introduce three speakers one at a time. And they're going to share about 5 or 6 minutes of just a few slides to talk about their role in funding. You'll see that they're all quite coming from very different angles. And what I'd like everyone to do is to ask some questions in the Q&A, and we will track those. And after the three presentations, we will we'll field as many questions as we can. We want to include make this as interactive as we can, but we will at least get through the first three panelists without Q&A before we begin.
Kevin,
Okay,
sorry to interrupt. Could you, we can see your speaker notes as well, if you could maybe switch to a different
really?
mode. Yes.
Thank you. That's hold on just a moment here.
There we
How's
go.
that?
Yep.
Okay. Okay. So the first speaker is Luca Zerbini, and Luca is the co-founder and manager of a venture capital firm called Peak Point Partners. He's been there for a year, and Luca's had quite an extensive career. He has worked at a number of large corporations, including HP. He was a consultant for Bain. He was a CEO, and he's been the CEO of private equity-backed companies in the US and Europe. Peak Point, where he is now, is focused on startups that are at the crossroads of technology and sustainability, which will be interesting to hear a little bit about. Luca had a thought that he wanted to share, that his what is growth, his how is innovation, and his way is sustainability. So Luca, why don't you take us through a few slides. Before we get started, I hope you can see this image here. I was fascinated by it, Luca. And so my question for you is, Luca, I've never been to Switzerland. I'm a tennis fan. I want to meet Roger Federer. Is this what it looks like everywhere in Switzerland, or is this your vision for what it will look like?
Well, thank you, Kevin. First of all, no, it doesn't look like that at all. Having said that, is really beautiful, countryside and mountains. As you know, we're in the middle of the Alps. And one of the reasons is that I love skiing, and of course, this is the perfect place. But the other reason, this is really, I would say, one of the center, if not the center, in Europe for everything that is innovation and sustainability, in the sense that, as you probably know, Switzerland, despite being a very small country, is producing an incredible amount of IP. Is actually the largest in terms of IP per capita globally, even larger than the US. And the two main engineering schools here in Switzerland are really, the base for a lot of the innovation that the various startups are then delivering globally. And we work, of course, across Europe in other centers like, Cambridge or Oxford in the UK and everywhere else. So look, what is behind what we're trying to achieve is, I've been long career in corporation where I was always focused on innovation and growth. And at some point, about 15 years ago, after we had our two, little kids, we started to realize that, there had to be more about, growing companies, and had to be for some purpose. And the purpose is, of course, sustainability. So we do invest in technology startups that have a clear sustainability angle. We, of course, look for proven technology because we will not be able to check all the different type of technologies through due diligence. So we want to see some level of revenue. We do believe that we are very good at scaling up technologies and innovations, and we're still learning a lot, of course, every day, but we put together a team that is able to do it not only from financial and investing perspective, but also from a marketing, strategic growth, innovation perspective, and in terms of people too, because of course people are key, and so the ability to provide the right people to complement an existing team or even the board would be very useful, right? So here is where we're seeing the data sheet of the fund that we're in the process of relaunching right now. In the first year of operation, what we did was to work through SPVs, because of course it was much more flexible and it was a way to create a track record. And where we are right now is actually leading up to the launch of this fund. And I have to say, you've heard from Shiv before. I had the pleasure of knowing him in Switzerland, and it's been very, very an inspiration to be able to work with him and learn from someone who has such an experience across different models. So that's where we are right now. We're in the process of really creating a wider fund and a venture studio really that can support the various companies in this space. So in terms of, if you go to the next page, the areas we're really working on are from if you want, from a sustainability perspective, are climate change and the loss of biodiversity, that then has an implication, of course, also on the social inequality, right? So the three areas are really these three, and then more specifically, you see here, the areas that we have at the top. So clear energy emission and carbon capture, smart mobility, smart cities, responsible consumption and packaging, and then the circular economy. As you probably know, Europe has started a long time ago to lead from a sustainability perspective with significant investments also from governance to create a sustainable environment. And here are some examples of investment we have made. I want to make one example, which is the third one here, Polpex, because I think it's very clear in terms of the impact that it can have, and it's quite successful. So Polpex is a company that has created the first truly completely 100% recyclable, biodegradable paper-based bottle, right? So their inspiration came from Diageo, the alcohol spirits producer, that was looking for a solution to replace glass, which, as much as is very recyclable, is not very sustainable because it's very heavy and, of course, creates a lot of carbon emissions. Also, the process of producing glass is not particularly sustainable. So they wanted to replace all their bottles, and they tried to find a solution in the market. They couldn't find it, so they created a partnership with an innovation lab in Cambridge. And based on that, they started bringing their friends. So, PepsiCo is now one of the partners of the consortium, GSK for pharma, Castrol for motor oil bottles, etc., or Unilever for a non-food type of bottles. So the idea has been to try to allocate to leaders in large corporations, at least for the beginning, the launch of these bottles. The first one actually has been launched right now, with Johnny Walker Black Label, completely in paper, which I'm sure seems very surprising for a lot of people. Because we are so used to use, glass bottle for that, but the company has been able to do it in a way that is very, premium and very well representing of the brand. And at the same time, they're launching, they're preparing to launch all the other bottles from the different producers. So PepsiCo has announced it also in their own last investor presentation, and many others. And as a result of that, of course, the value of this company has grown significantly. So in 6 months, we have already done 2.5x the investment we made initially. Of course, this is a good example for us of the type of value that we can bring, because a lot of the introduction to these brands were done also with us. And so that's an example for us of what we're trying to achieve. There is a potential market out there of something like 200 million bottles every year that can, have an impact on the way we live, and of course, have an improvement on the amount of plastic that today is getting into the oceans every day.
Wow. You said 200 billion bottles?
Yeah, that's exactly right.
That's quite an addressable market.
Yes, so it was not very difficult to talk about that type of market to other investors, actually. No, and look, I think it's not going to be changing in one day, right? But that's the kind of, let me say, sector shaping type of activity that we want to do. And some of the other investments you see are as transformational, and that's the way we need to address this. I mean, I think sustainability is becoming the leading driver of changes in most of the industries out there that have an impact on that. And it's important that we don't work in an incremental way, because it's really clear that we don't have much time left, and we need to move fast.
All right. Well, thank you so much. That is fascinating. I'll be interested to learn more about.
Yes, look, and Ashil did before. I also want to thank Wharton, because I'm always looking for ways to give back, and I think it's if you want to get in touch, of course, you're free to do it. LinkedIn is probably the easier way to do it. We're very, very excited to, it's almost 20 years now that I haven't been at Wharton, but I think it's great to be able to connect with so many people that are in the same space and having an impact.
All right, very good. Well, let's move to Peter Cashin. And Peter, after getting his MBA from Queen's University in Ontario, wow, Peter, you've had quite a run at IFC. He's now the Chief Investment Officer and Global Head of Climate Finance at the International Finance Corporation here in Washington, DC. And he's been at IFC for more than 20 years. So that really is quite an impressive run. And as many of you know, IFC is a member of the World Bank. It's the, I guess, the private sector component of the World Bank. Peter.
Great. Thanks,
what do you
Kevin.
have to share today?
Yes, no, it's a real honor to be here today. And maybe I'll just say that I'm not the chief IO of the IFC, but within the financial institutions group, which is where I've been sitting for the last decade. But yeah, no, had a great run at IFC. I've been there over 26 years now. Actually, I think every three of my colleagues is probably a Wharton grad. So I'm not a grad, but well familiar with the school and impressed. And I'm also very impressed with the work that you're doing in sustainability and the leadership that Wharton is showing there. That's great. So I think I only have 6 minutes, so I better jump right in. Listen, I think probably you all know the World Bank Group. You may not know IFC. I'll say a few brief words. So we're the private sector arm. We're the largest development finance institution out there. We have a global reach. As you can see, we've invested over 300 billion since we were originally founded. Really well, at least for me, one of our main raison d'etre is the climate finance area. And just this past year, IFC invested over 7 billion in climate finance, and the World Bank Group overall 26 billion. In the little chart there, you see IBRD. So that's basically just another word for World Bank. Now, just recently, we adopted a climate change action plan in the spring of this year. And I think it was very timely, particularly given the COP is now upon us. And we really made some really, I think, even profound commitments towards climate. So over the next 5 years, we will bring all of our investments and operations to be 100% aligned with the Paris Agreement goals. We're going to invest at least 35% of our investments in climate finance. And we're prioritizing 5 key sectors. And we're also working at the country level, particularly on the World Bank side, to define the climate priorities for each country and how we can help them meet their nationally defined contributions. If I think about what's needed to combat climate finance, the climate change risk, it's really going to take a World War II type action, where you were thinking back to that era, all parts of the economy turned towards fighting a war. And I think it's that type of transformation that we will need to really combat climate change. And this next decade will be the most important decades of our career, because we have a very short time frame and window to get it right and really increase the amount of financing and technology to this fight. And really, I think when the history of the World Bank Group and IFC is written, we may be known more for what we did to combat climate change, particularly in emerging markets, than poverty alleviation, which is really our core mission to date. Kevin, I'll go to the next slide. So I'll say a few words about what we're specifically doing in the area of climate action. And this is specific to IFC. So we have a very active advisory services business. And basically, we give advice to 2 types of clients. The first is at the firm level. So if we give a loan to a bank or buy a green bond, we'll give them technical assistance on how to deploy those funds correctly to renewable energies or climate smart agri. Another piece of advisory services is the programmatic advice that we give to governments, regulators, market participants, really to establish and grow, create a climate market. So for example, green bonds. We've created green bond markets in at least half a dozen countries, and we work programmatically with each of the pillars in that country to develop that. The second area, of course, is investment. So that's how we're measured. So that's what we're most focused on. We've had some pretty impressive growth. Going back to 2016, we only did 400 million in terms of climate finance within our financial institutions group. This year, we've jumped to over almost 3 billion, and that now represents 34% of our business. For me, the biggest area where we need growth is on climate capital markets. So we've identified over 23 trillion of investment opportunity between now and 2030 to finance this transition to a green economy. And banks and governments cannot finance that alone. At best, 10 billion trillion can be funded by them. Where we need to fill that gap is capital markets, the institutional investors. And if we compare all the development finance money in the world, which is a pretty good sum, and we compare that to institutional money, it's actually 900 times more in the institutional space. So it's critical that we bring some of that 900 into emerging market climate finance. And one of the keys is innovation and creating new products that they can invest in, meaning institutional investors. I mentioned we took a leadership role in the past in creating green bond markets. We've now turned our attention to blue bonds and blue finance, creating climate smart agriculture, climate smart trade, sustainability linked loans and bonds, which is a really new, interesting area. Next slide, Kevin. So I'll just share two quick case studies because I know we're a little tight on time. And I wanted to profile a financial institutions deal and then a recent energy company deal. So CIB, which is the largest private sector bank in Egypt, we did a green bond with them a few months back, 100 million investment by IFC. And it was the first bond in the country and the first green bond in the country. So it was really very innovative. Mind you, took a huge amount of work. And we also were able to leverage blended finance or concessional finance from the UK government because we were promoting green building construction, which is what this program is supporting. And for us, it was really a landmark transaction. And now we're seeing significant interest from other banks in the country and in the region, and for the CIB to potentially do a repeat issuance. SemCorp is a recent issuance just last month, very large, over 675 Sing dollars, so about 500 million US. IFC was an anchor investor. We took up 24%. And the really interesting thing here is that it was a sustainability linked bond. And if the company, which is a large Pan-Asian energy provider, can meet the targets, the coupon will step down by 25 basis points over the next, if they reach their target of reducing emissions by 20% over the next 4 years. So this is what we anticipate to be a significant growth area, where you have either bonds or loans that are linked to some material climate objective, and then the issuer gets a benefit by doing that. Kevin, I'll pause there and look forward to any Q&A. Thank you.
Thank you so much, Peter. Yeah, I like the idea of linking rates to results. I like that a lot. Joan Larea from Convergence will be joining us next. She's our third superstar on the panel. This is interesting. I've known Joan, but I didn't know that she studied Mandarin and Oriental studies in undergrad. So that's really fascinating. Joan also went to the Lauder Institute, and she's now the CEO of Convergence. And Convergence, she's started in 2016, and she's been the CEO from the beginning. So that's really quite fascinating. And Convergence is it's a network for blended finance, and you'll learn more about what that means in just a moment. Joan.
Thank you, Kevin. Go back one slide, or just please stay off this slide for a second.
Oh, sure.
Am I visible? I actually don't see my own video, so I'm just assuming my face is visible somewhere to everybody else.
It is.
Okay, great. Yeah, so Go Lauder program. And I'm a three-peater at Penn. I have an undergraduate degree, as you mentioned, plus the business degree and the Lauder program degree as well. So I want to sort of connect some dots here. So the first presentation we had was from Luca about a developed economy approach to climate finance. And then you had Peter Cashin talking about what IFC is doing in markets where not every institutional investor can go, or where there's a perceived risk that's too high for folks, or somebody has to be the first in. And IFC has a great track record of doing all of that. I'm also an IFC alum for 10 years. So I'm pretty familiar with that world. So you have, the most developed economies, snazziest investment opportunities. Then you have in the IFC's realm of more difficult things to get done, but ultimately they, run a profit and are financially sustainable. Blended finance, you would imagine to be this small, wonky world, but it turns out to show up all over the place. It just often is not labeled as such. So let me tell everybody what we're talking about when we talk about blended finance. So blended finance is the use of catalytic capital. Anything from a grant to patient capital to very low price debt to technical assistance from a grant pool, anything of that sort. It's the use of that kind of money to attract private sector investment in ways that support the sustainable development goals in developing markets where it otherwise would not have gone, either because the perceived risk is so high or the return doesn't merit it. So what we do at Convergence is provide people the data, the intelligence, and the deal flow acceleration opportunities to get their deals done that might need this kind of help. So let me go to the next slide. Just conceptually, what is blended finance trying to do? If you remember your Wharton days, there's this blue line of the efficient market where the risk and the return are calibrated, and there's a strike price and somebody does the deal and we're all happy. Higher risk means you need a higher return expectation to match the risk you're taking. Anything below the blue line doesn't get done because the risk is too high for the return, right? So what blended finance does conceptually is take deals that are at point A, they're below the market, and moves them either to point B or to point C. Point B is essentially some donor or philanthropic organization or somebody who's operating for impact, not just returns, steps in and takes on some of the risk and moves that deal from point A to point B. Now it's lower risk, same return. Private sector investors might join that transaction now because they feel like they are calibrated again. Blended finance can also do the other. It can move you from point A to point C, which is saying, we're not going to touch the risk profile of this deal, but we, the donor, we, the government agency, whoever it is who's trying to get the private sector to jump into the deal, we will juice your return. If you think about the transaction that Peter just talked about, where there's an incentive for performance in that green bond in Egypt, and they used blended finance to do that. I'm sure that IFC dipped into a trust fund of some sort to pay for that. That's blended finance. So it pops up all over the place. You just don't realize it. So that's conceptually. I thought I'd give you two quick examples of blended finance deals. These are not deals that Convergence did. These are deals that we wrote about or have shown to people as an educational exercise. The first one is pretty simple. It's from 2012. It's a fund. The next, and so it's going to look a little bit like Luca's fund, but it's got blended finance in it. The second one is a bit more complex. It's also a fund. I don't want everybody to walk away thinking all blended finance happens in funds. Peter presented a bond deal. You can see companies who are taking grant money and doing things that they otherwise wouldn't do. It shows up all over the place in the emerging markets, and especially climate. Climate is a place where very often there are risks people are not willing to take, or markets they cannot go into without a credit rating on a bond, or there are all sorts of reasons why blended finance shows up a heck of a lot in climate. And climate is actually a big feature in blended finance. We've recorded like 700, or just under 700 transactions in this space that have closed on financing, and over 100 of them are in the climate space. So blended finance and climate go together really well. So let me turn to the first of these two. All right, so the Danish government wanted to induce a set of Danish institutional investors, pension funds and the like, to go into the developing world in renewables. And this is 2012, when renewables weren't necessarily a slam dunk. And so what they did is create a fund, pretty big fund, $220 million was the envelope, to go invest in transactions, projects that reduce greenhouse gases or otherwise provide or climate change adaptation exercises. The way it worked wasn't that the Danish government said, oh, we'll take all the downside. If you make money, you get to keep it. That's not what they did, because their investors were saying, we need accompaniment on the downside. We need to get to a certain return, but we're kind of indifferent to returns above that threshold because we have a target return. So this fund was designed so that the overall fund was hunting for a return of 12%. And as they were investing, the government and the investors were going to share in all the distributions evenly. After they hit their original capital they put into the fund back, then the next 6% went to the investors. So they're ahead. They've gotten their money back, and now they're going to earn up to 6% before the government shares. After that, the government had a catch-up period where the money kept coming back across the threshold for the investments they would share. And then anything above 12% goes to the government investor. So this is an example of getting people into a transaction where they had a return band that they wanted to hit, but they otherwise would not have gone into these markets. We wrote an entire case study on this. It's available on our website. So over the years, funds got more and more fancy about how they've used blended finance, which takes me to the next slide. And this is my last slide. I want to show you a little bit more complex structure. This is Climate Investor 1. There is now in the market Climate Investor 2. We're not pumping any of these deals. This is just strictly to give you an example of how people can think about blended finance. This thing closed at $800 million so far, and it is trying to invest in renewable energy projects in emerging markets. Now, what the proponents of this structure recognized was that the moment in each project, a renewables project, say a solar project in, pick a country, Malawi, when the developer is hunting for the place to build, when they're trying to understand the regulations in the market, when they're trying to figure out what the tariff is going to be, all of that work tends to be extremely high risk. You're going to look at 100 deals and maybe the one you can do, and you're never going to get your money back in many cases in these markets. So what they did was structure box number 1, a development fund, totally grant money, not that much money, 50 million. It's going to pay for that kind of work around the world to figure out which renewables projects are potentially going to be doable. Once there's a permit issued, then that fund is going to sell that asset onto the set of blue squares on this page. This set of blue squares is blended. It is not all grant capital. It's got 3 tiers, everything from donor capital to institutional investors. And it's big. It's like I think it was $800 million. That square is going to take projects, individual solar projects, hydro projects, whatever they are, from breaking of ground until first commercial operation. That's also a very risky period in any renewables or power asset, because what if it doesn't get built on time? What if it gets built at a higher budget than expected? What if the government slows you down? What if the currency tanks? There's all sorts of stuff going on. And as those assets are built up and they turn on and start producing energy, that set of blue squares is going to flip that asset to a refinancing fund, which is the lowest risk, because once these invested projects are, throwing off electricity, they're generally able to collect, and they kind of have a constant cash stream. So the beauty of this structure is that it took the risk, it separated it into periods, it put the most concessional capital onto the highest risk and backed it off from there. Donors like this because they don't want to over subsidize anybody. Investors like this because they can see something that they can invest in. So these are examples of blended finance deals in climate that are going to hopefully get us forward faster than if the donor set just works on charitable work and the investor set just picks off the things that are investable today. So the whole idea of blended finance is to speed up the game, get people working together. They're still going to, be fiduciaries for their own money or government servants thinking about your tax money. But by working together sometimes in transactions, we may get more things done faster. I'm going to stop there, Kevin, and open it up.
Thank you so much, Joan. It's interesting when you say that, and I think about a number of deals, there is blended finance, and you're right, it isn't always described as such. So I will think of deals very differently from now on, that's for sure. Thank you so much. Let's see, we've got about 10 minutes here. And we do have a number of questions. So I'm going to start the first one.
Yeah, you may want to stop sharing your screen though, because we're all seeing them.
Oh, geez, okay. Thank you for
Yeah,
that.
we got your back, Kevin. We got your back.
Appreciate that. Okay. There's a question here from Clarraine Zagreen. I hope I'm pronouncing that right. And I'm guessing it's for you, Luca. The question is, how might you help us with our plastics consumption? You're solving the glass issue, so on to plastic.
It's a pretty big question, right? So I was one of the founders of the Ellen MacArthur Foundation, which has been working throughout the years to really stop the issue of waste plastics. I think it depends a lot of where the person is, right? The issue that is the old plastic in the ocean is very different in different countries. Because just for instance, in Europe and the US, there is more infrastructure existing, even if the recycling is pretty limited. The reality about this issue is basically that you need three things to work at the same time. The first one is related to the material of the bottle, right? So assuming that it's plastic, for instance, it must be recyclable or reusable or compostable. There is the issue of infrastructure. So is there a collection, sorting, and recycling infrastructure that is working? And then the last one is related to the consumer. Does the consumer know how to recycle, or what they has to do to reuse or put in the right place, let's say, the material? So I would love to give you all the answer, and I probably we could have a very long conversation, but in practice, what the entire industry is working on right now is to either substitute plastics with other material when it makes sense. So one example is paper, where is possible, because paper has, of course, a much lower barrier to oxygen and to moisture than plastic, sorry. Or is trying to find solutions that are related to the material of plastic. So for instance, PET bottle, there is a very good recycling infrastructure, so that's not a big issue. But other type of plastics are almost impossible to recycle today. And then there is the whole question of how to make sure that this very complex situation is actually very well understood by any consumer, and that's, I think, is the combination of all of that the industry is trying to address. And I think is not one solution as usual in this space of sustainability. Is a combination of solution that is required. And if you want to speak more, more in length about it, I'm happy to take the conversation somewhere else. Feel free to reach out on LinkedIn, but I can take you, for hours on this discussion, depending on which type of material, this type of product needs to be protected.
Thank you. It's helpful that you at least framed the problem and the enormity of the problem. It's not just a scientific or technical challenge. It's a much bigger
and just to get a scale of the problem, you have to think that about 6 Boeing 747 per day are actually going in the ocean of plastic, right? So it's not something that we can just say, okay, it's a problem, but no, someone else is gonna. It's really like key, and a lot of that actually, unfortunately, because of the lack of infrastructure, happens in Asia. So the 10 most relevant out of the 10 most relevant rivers, 9 of them are in Asia that are actually, basically leaving this plastic into the ocean. It's a lot to be done.
Yeah, that's more than we can handle and process all at once. I'm going to move on. I'm going to move on now. And this is a question for Peter from Vanessa Liu. And her question is, why is a large portion of the $23 trillion market for climate financing opportunities still unaddressed by institutional investors? And I think this is kind of the key. What are the opportunities? Excuse me. What makes opportunities in this market different from other investing opportunities? And what does it take to close the gap? That's another big one.
Yes. No, but it's a fundamental question and one we ask ourselves. So I can answer it a few different ways. The first is that institutional investors, if there are good investments, they will follow them, they will find them. So really part of the role is to create those investments that will bring them in. So that meets their rating requirements, that meets their maturity, the interest rate, etc. So the way to create those is fundamentally you need to have capital markets functioning in that country and issuers, say in a Colombia or in Indonesia, capable of issuing a bond that's at the sufficiently high rating level. Now, to do that, to do a cross-border issuance is not so difficult, but to do a domestic one actually takes quite a bit of work because the infrastructure needed for capital markets and bond issuances needs to be in place. And in fact, there are significant domestic institutional investor funding sources available. So one of our key roles is how do we, aside from promoting cross-border issuances, how do we create the market infrastructure to allow for domestic capital market development? And I think there's also much more sensitivity and interest by institutional investors in ESG and climate. So I think we'll have to be more proactive in terms of marketing these deals to them and also actively mobilizing them to come into deals that development finance institutions like IFC is putting together. In fact, one of our main metrics is how much extra money do we bring in and how much of that is from institutionals? Because, and in some cases, as Joan was saying, leveraging blended finance to make them more investable. So it's a multi-year process. But as I said during my little intervention, those funds are 900 times the size of what us development finance institutions have. So it's really absolutely critical that we tap into that more than we're doing today. Thank you.
Thank you, Peter. Joan, this last question, we just have a couple minutes. This last question is for you. It's from Kiran Kumaran. And the question is, how is Convergence working with FX managers? I'm guessing foreign exchange managers.
That's actually a really interesting subject area. So one of the things that keeps investors from going into the markets that Peter and Convergence focus on, or IFC and Convergence, not just Peter, is the extreme foreign exchange risk. You can, if you're a US dollar equity investor, make a quite substantial positive return on local currency. When you convert it back to US dollars and try to take it home, you haven't made any money. And if you're a lender, you have problems even getting your principal back. So it's a big issue. So Convergence doesn't do transactions. We try to help other people do them. But with that noted, there is something called TCX, which stands for, I think, the currency exchange, which was stood up by a number of development banks. I believe it includes IFC, as well as development agencies, the donors of the world. So this is a blended finance entity, and it provides swaps and hedges in exotic illiquid currencies, the kind of currencies that are used in the countries where we operate. So that is one example of a blended finance structure that's specifically focused on that risk.
Well done.
It's huge. It's like hundreds of millions of dollars in capitalization.
Right. This is a topic we have 40 minutes today. We could easily be talking for an hour and a half and still not get through it. The topics are just so fascinating, and in particular, as the cost of the various renewable energies come down, and the deals change along the way, and so it's a fascinating, dynamic world, and we can only just hope that the costs keep going down, so that for renewable energy, so that we can make, fill the gap in the way that we need to very, very rapidly. I'm going to wrap it here. I want to thank everyone that participated. I want to thank the panelists, Joan, Peter, and Luca. I want to thank all the people that joined us and asked questions. And I want to thank the Wharton School and the Risk Center for putting this incredible conference on. And Arthur and Shiv, I want to thank you for setting up the discussion today. So we're going to sign off now. I think I'll hand it off to Arthur. Thank you. Or is it to Shiv?
Thank you.
Not to me. Thank you.
Hi, actually, it's to Amanda. Kevin, Arthur had to leave a bit early,
Sorry.
so taking over his duties. No, so thank you so much, and thanks again. I echo your thanks to our panelists, Luca, Peter, and Joan, and of course to the attendees. Really great discussion. I think you're right. We could keep going. I love hearing about all the deals and the structures. It's the Wharton nerd in me, so really appreciate the input there. Our next panel is on climate change startups, and our moderator for the panel is Cheryl Hicks, who is going to be introducing and guiding us through the session. So Cheryl, I will actually just hand it over to you.
Perfect. Thank you, Amanda. Am I audible?
Yes.
Great. Well, hello, everyone. My name is Cheryl Hicks, and I am the chair of the board of ACE Infra Partners, investing in sanitation economy infrastructure, and a senior advisor to the UN Global Compact CEO Water Mandate, which is focused on business actions on climate and water. And really happy to be moderating this panel today to hear about the exciting innovations in climate change startups. So this panel will zoom in on what's hot in the climate change startup scene by reviewing the climate relevant technologies and innovations receiving great interest from across the capital spectrum. Our panel will share both investor and innovator perspectives. So let's get kicked off and let me introduce the speakers. Our first speaker will be Christian Hernandez. Christian is a partner at 2150, a founding partner, and the firm is investing in technology companies that seek sustainability, seek to sustainably reimagine and reshape our urban environment. Over to you, Christian.
Hi, thank you. And thank you to the Wharton alumni and the Risk Center for actually putting this together. It's amazing. So I do have some slides today to walk us through it. I will whiz through them, and it's actually this from a report that we just published this week. It helps introduce what we focus on, but also some areas of innovation that are getting funded, and more importantly, areas that we need to be innovating in, which are not. So at 2150, we invest in technologies that make the built world, the urban environment efficient, resilient, sustainable. And we think that the urban environment matters. It's half of the world's population. Urbanization is growing. It's the consumer of the vast majority of the world's resources and generator of the vast majority of the world's greenhouse gases. And so we feel, quoting a UN official, that the battle for climate change will be won or lost in our cities. And we wanted to actually educate others about the opportunity in what we call urban tech. And so we did this report recently with Dealroom, which is a data platform tracking startups here in Europe. And it looked at a number of different areas and mapped how investment was progressing in each of those, and it highlights some companies. And I figure it's a great way to talk about urban sustainability and bring to light some exciting startups. So this is a summary version of that presentation. First, the good news. Urban tech investing has actually significantly increased in the last couple of years. Sorry, it's not like we've been doing this for 18 months now and don't know how to use Zoom. So this is actually tracking investments per year into a broad definition of our urban technologies. So 4.4 increase since 2016, now at 23 billion year to date. And if you look at who's actually driving this investment, you'll see a number of names that you will recognize from sustainability and climate tech, but also some generalist VCs or generalist investment platforms that are coming into the space. So there's funds like Contrarian Ventures and Urban Us out in the US, Breakthrough, who's ever present, Lower Carbon, who's come out roaring recently, a fund here in Europe called Demeter at Series A, ourselves. But then you start seeing people like Khosla Ventures, Temasek, Fidelity, more generalist, large institutional investors also coming into this urban sustainability space. We need more though. If you drill down into the types of problems that we're trying to solve, I wanted to highlight a couple of them. This is actually looking specifically at waste management, which reached 1.3 billion of the 20-something billion total invested. And that's a 19-time increase from 2016. So a lot of focus in this space. Some examples of companies in the plastic recycling space, in e-waste and batteries, recycling, AI and robotics, like AMP Robotics in the US, Great Period over here, and wastewater management and treatment. So something that Luca probably knows a lot about. So a lot of extra interest in the space, and it's actually growing quite aggressively. Looking at another area where we should be investing, and until recently we're not, this maps concrete and cement technologies. Concrete and cement represent 8% of world CO2 emissions. We are literally addicted to it like water as humanity. We are building, to quote Bill Gates, a new Manhattan every single month, and all that is being built with cement. We need to innovate ways to have more sustainable concrete and cement. I think people have been saying that for a long time, but nothing had really been moving until this year, where 133 million was deployed into space. It's still a drop in the bucket for the change that we need to have, but it's actually a number of interesting companies from Canada to California to Taiwan. Interestingly, the two winners of the X Prize this year that focused on using CO2 as an input were both working on concrete and cement. It's a space we've been invested in already, and we will probably do several investments in the space given how critical it is. Heating and cooling is important. A lot of people focus on the heating part. I personally am actually very focused on the cooling part. If we deploy AC units the way the IEA expects us to deploy them just in India alone between now and 2050, and we still use the same refrigerants that we use in the average AC unit today, we can drive all the Teslas that we want and eat all the less meat that we want, and we'll still be in trouble. So this is actually, I think, one of the most critical spaces for innovation. Very little has been invested into cooling, more into heating. Deployment of heat pumps is actually thriving in the US, lagging in Europe. So it's been a bit all over the place in terms of investments in the space. Some pretty interesting companies around efficient heating and cooling. I think I have a drill down into it. Efficient appliances, so and HVACs, building envelope sealing, the company called AeroSeal that we backed with Breakthrough, smart conditioning thermostat, both consumer focused and B2B commercially focused, thermal energy and heat pumps, and finally passive cooling, which has gained a bit of interest in recent years, quite significant amount of funding going into that space. So much more can be done in this space, and it's one that I always highlight as critical to solve and lagging. And then finally, air quality. 1 in 8 people in urban environments supposedly die from air pollution. It's bad. It's ever present in urban environments. How do we tackle that? And that goes from companies that look at hyper-local air quality tracking, like a breezometer or an Airly, companies that are trying to mitigate some of the indoor air pollution through better filtration, or companies that are actually trying to capture some of the pollutants from exhausts and actually convert it into CO2. I think it's called Remora from memory. So some interesting innovation in the space, but it's definitely, 41 million invested year to date. It's an area that, at least for me, is critical and one that we should focus on. We just did an investment tied to the space, which replaces diesel generators in a construction site with battery-powered generators to power all the equipment. Those diesel generators generate somewhere along the lines of 35% of PM10 air pollution and 15% of PM2.5 in urban environments. So a pretty critical area of innovation. Just some examples of companies in the air quality space in different geographies. So as I said, this is going to be a whirlwind tour of why urban technologies matter for sustainability, some examples of areas that are being funded and some that require a lot more attention from people like us. I'll stop now.
Great, thank you, Christian. You covered the key problems to solve in the urban environment, where investment is going and where we need more deals, more innovation. But could you also just say something about the trends? Have you seen, what have you seen that is truly transformative or has the potential to be truly transformative?
So if you just stack up the problem areas of the urban environment, right? So concrete and cement, it's 8%. Carbon Cure and a bunch of others are receiving funding, and there's a lot of attention in that space. Steel is 7%. That's a lot harder for venture capital model to actually scale out. Like building a green steel factory in Sweden requires hundreds of millions of pounds. So I've seen a couple of other innovations trying to focus on steel efficiency, so making steel more efficiently and therefore less polluting. But it's that one I think is one that's going to be much harder to combat. Other areas that we've been looking at that are challenging is the electrification. So we should all be driving electric vehicles, but if you're going to be doing electric vehicles, you need an infrastructure for charging. What actually powers that infrastructure? So it might turn out that you're using coal to power the energy that ends up going into your Tesla. Not great. So kind of the systemic interconnected challenges that can't just be solved by a startup. And then finally, something that we are beginning to focus on is using biology instead of petrochemicals to create materials. And there's some actually really cool examples. There's one in North Carolina called Biomason that genetically modifies bacteria to secrete calcium carbonate. So effectively you make a brick from bacteria. Challenge is you need a lot of bacteria to make a brick and you need a lot of bricks to make a building, but the science is quite cool.
Thank you. Thank you, Christian. We'll come back to you in a little bit. But next, I want to go to our next speaker, Gabriela Hercano, who is the CEO and co-founder of iClimateEarth. iClimateEarth are redefining climate change investments by focusing on companies that can enable CO2 avoidance. Over to you, Gabriela.
Oh, thank you so much, Cheryl. I'm delighted to be here today. I'm a Wharton MBA myself, class of 2002. So of course, it's a big pleasure to be talking to you all today. I'm calling from London. We're a London-based green fintech, about 2 years old, and I started this venture together with two other fellow Whartonites. And we were determined to shift the narrative in climate change investments and focus towards innovation. Obviously, there's a need for a lot of investments to come towards the space. And we thought that the financial products, in particular exchange-traded funds, were not telling the story the way we think is relevant. Most of the climate change funds, they focus on the companies that are doing less harm, is the let's include and hope for some transformation type of bucket. And we don't think that that's the relevant. We need capital markets to be a source of good. We need to channel investments towards what is really relevant. So what we think is very relevant is the let's exclude quite a lot of sectors and let's focus on innovation. So that's the type of investment products that we brought to market. Very much permeated by the idea that the best way to reduce carbon in the atmosphere is by not emitting in the first place. So what we did was to come up with a very unique approach that we develop ourselves that allows us to find the companies that do just that. So we're looking for the companies that preclude emissions from ever taking place. And of course, we negatively screen, so we don't want companies that are very much associated with fossil fuel, but have some type of innovation related to climate change and to the transition. We wanted the pure players like Nuvi. For fuel transparency, I invited Gregory. His company is part of both our ETFs. Tells a very exciting story. He's going to get into that, which is the story of vehicle to grid. But if we step back and we think about the big picture, the common denominator in our companies is that the products and services that they sell enable avoidance, right? Not emitting in the first place. But the reason why we're very excited that these solutions are going to be adopted and scaling up in a really fast pace is because they make economic sense. So I will share one chart only because I think that this one tells the whole story. Where is that chart? Just bear with me for a second, please. I hope you can see my screen. Yeah?
Yes,
so
we can.
Perfect. So this is the US. This is all the electricity
sorry,
by
Gabriela,
source.
just to interrupt you for 1 second. We just
Sure.
see a list of documents. We don't see your chart.
Oh, sorry. Okay, so let me try again. maybe it doesn't allow me to do that. Can you see now? No.
Not yet.
No.
I don't know, Amanda, if you have this slide as well, if you could help us to share it.
It's not
I
a
do not have
slide.
the slide.
Is a race infographic. It's pretty large. It's about 50 giga. Okay, maybe that's.
You know what, Gabrielle, do you want to
Okay.
speak to it, and then we can put it up when we come around for questions.
Perfect, we'll do that. So it's the race where we see the shift, the very drastic shift in the energy matrix in the US, and we forecast, we started from the historical figures back in 2010, and we're forecasting all the way to 2040. So the bottom line is this: our base case is that we're going to be adding, the US will be adding 1,000 gigawatts of solar by 2035. 20 to 25% of that will be what's called behind the meter. So the solutions, the sun run that epitomizes that idea that the solar rooftops where users that are becoming prosumers, producers and consumers are choosing to produce part of their own electricity. And that is really disruptive and very transformational. And together with that ability to produce electricity at the point of consumption, behind the meter, will come the use of different types of clean energy storage. So part of that is mobile energy storage inside your electric vehicles. It's called bidirectional vehicles to grid, and Nuvve is the pure player in that space. It's a very exciting story. And then, of course, you have the stationary part of solutions, the Tesla power walls that epitomize that idea. In aggregate, you manage all these clean energy storage assets to the benefit of the grid. And we're going to start doing things that we have never been able to do before, like demand management, peak shaving, frequency regulation, all of these things that the grid barely, desperately needs as we electrify transportation and we electrify heating and cooling. So the US is going to dramatically shift. We are at about 3% of the electricity matrix is coming from solar currently, and we're going to increase that to 42%. So of course, as you add a lot of renewable energy that is intermittent by nature, you need to deal with that by adding a lot of storage. So that solar story in the US is a 10x story for the next 10 to 15 years. And that clean energy storage is over 100x, right? So making use of those assets is fundamental. It makes economic sense. Lucky us, it decarbonizes the planet. But the reason why the solutions are being adopted, it's because they make economic sense right now, not in the future. So in our fund, we represent these companies, the companies that are not just with concepts, but with solutions that are being used as Nuvve's vehicle to grid. A lot of very exciting data points that Gregory, I'm sure, is going to be walking us through. They're being commercialized, and there's a huge appetite for capital markets and investors for that type of story. So what we have been seeing in the markets recently is this, of course, booming on SPACs, companies like Nuvve that came to market and got listed through special purpose acquisition companies. And that's very much because the public market is eager to participate. So SPACs are democratizing this type of investments that until very recently, were being monopolized by the limited partners in the venture capital funds. These companies are now going listed potentially earlier than before, to the benefit of investors that are now going to be able to invest early and ride that wave. Of course, there's risk whenever you invest. There are a lot of risks, but in our view, if you invest with the companies that are decarbonizing the planet and providing solutions and that are in line with that transformation of a grid that is becoming much more solar-based and wind-based, because those solutions make economic sense. Solar panels have decreased in cost by about 80% in the last 10 years. Our forecast is for another 75 in the next 10 years. So that means that the installation cost, which is now roughly $800 to $900 per kilowatt, will drop way below 500. That means that that levelized cost of energy will be below 20. Solar in the teens, right? $15 to $18 per megawatt hour changes everything. So the solutions make economic sense and they're being adopted for that reason. It's a pity that I couldn't show my beautiful race chart, because you will see how we're going to be not only be able to decommission and retire all that coal, which is source of a lot of emissions, obviously, but then increase in a dramatic way as the elasticity of demand for electricity increases as we electrify transportation and heat. And our funds are representing the companies, not just NUV, but Proterra, STEM, EVgo, very exciting stories, companies that are finding a way to bring to market these solutions, the solutions that allow us to optimize and decentralize our grid based on renewable energy, increasingly competitive in price. So their adoption, that's our base case, is going to have that S-shaped type of curve. Now, the final point is that capital markets can be a source of good and is being a source of a lot of capital to companies in the space. We do expect to see more listings through SPACs. Yes, absolutely. You have to really be able to analyze the forecasts and the blue sky stories that companies that usually go public through SPACs, have a very rosy scenario of the way that things will evolve. But there's a lot of abundant opportunity. Solving climate change can also translate into very exciting investments. And I think it's a great thing that these companies are able to get into the public capital markets sooner rather than later. That could really translate to fantastic returns. That investors, retail investors, obviously large institutional as well, but the smaller retail investors, part of the reason why we love ETFs is such a democratic tool, can now tap into. So I think, with that, I'm very glad that Gregory is going to be presenting right after, because, having that specific case of a pure player in the vehicle to grid that is going to change everything because it makes economic sense. The technology is there, the solutions are in place. It's digitalization meets decentralization of the grid and meets the decarbonization of the planet. Is a win story, is a beautiful story. I look forward to his presentation.
Thank you, Gabriela. And maybe just one quick question on the back of that, just around the trends. I mean, you talked about some of the trends that you're seeing. I mean, what is the outlook? So, there's a lot of positive movement, as you're saying. The innovation you brought into your funds is really helping companies get access to public markets faster. But where do you see this going? What are we excited about in the next couple of years, up to 2025, let's say?
We see ESG broadening. We launched our funds in Europe first because ESG is more mature on this side of the pond. We launched both funds in one go this summer. We've been talking to a lot of investors in the US. ESG is broadening, which is a very good thing. So that holistic approach, not only the companies that are leading on the environmental side of things, but they are very robust in their practice in terms of social issues and governance issues. So that's one thing. We think that the direction of travel is clear. We have assets under management in Asia. It's not, ESG is not universal. China, we have had a few conversations with Chinese investors. They're after innovation in a material way, not quite yet ESG. So ESG is not yet universal, but it's definitely broadening. So that's one aspect where I think the direction of travel is crystal clear. So that's one point. In terms of our base case is definitely that solar becoming such a competitive source of energy that really changes everything, and it really converges with other technologies, and electric vehicles is an obvious one. Green hydrogen is another one. The green electrons becoming so incredibly inexpensive, will be able to power the production of the green molecules and then be used 360 back to green electrons, and then to the benefit of the grid. It could be potentially another way to mitigate and minimize that and solve the renewable energy intermittence. So we really see that convergence. Our base case is 50 million electric vehicles being sold in 2030, 20 of that being in Tesla cars. our base case is obviously the bidirectionality of those batteries. Volkswagen has already announced that as of 2022, 100% of their electric vehicles will have V2G capability. So we think that we're going to see that convergence of all these solutions that will really transform the way we produce electricity much more at the point of consumption, the way that we manage energy. So we're going to become much more energy efficient, the way we go about using those assets and the resources, the stationary batteries and the batteries inside the vehicles, all of that, empowered by 5G and the Internet of Things. So this convergence of technologies is definitely, in our view, just going to go deeper and deeper.
Thank you. So a globalization of ESG is what you see on the horizon. We like that, and also, I think what you've been talking about is a more systemic view of the energy systems and perhaps a better understanding of how those systems are evolving. Thank you, Gabriel. We'll come back to you, and I want to say to all of those listening that, and I'm sure you heard this in the last panel as well, please use the chat function and the Q&A function to interact with our panelists. And panelists, when you're not speaking, please do check the Q&A and the chat and try and hop in and answer and comment. Keep this interactive. Thank you. So we've heard from the investors on the panel, and now we're going to hear from the innovator. We have Gregory Polusain, I'm hoping I'm saying that right. Gregory, Chairman and CEO of Nuve Holding. And Nuve is accelerating the electrification of transportation through vehicle-to-grid technology. Over to you, Gregory.
Great, thank you, Cheryl and Gabriela. Thank you very much for all those kind words about Nuve, and I'm very honored to be here also today as a Wharton grad as well. So let me share my screen here, and I'll take just a few slides trying to describe to you what Nuve does, right? But in a few words, what we are doing is we are converting electric vehicles in power plants. As Gabriel said, right, we became a public company last March. We went through the SPAC process. We completed the IPO, or the SPAC process on March 23rd, 2021. We are the leader of the vehicle-to-grid technology deployment. As we can see on the right side, we have always had a very worldwide vision on how V2G should be developed and deployed. I grew up in France, but I came to the US about 22 years ago, initially working in the telecommunication industry. But the V2G piece was really taking off more in Europe. So we actually launched commercial operation in Denmark in 2016, where we initially also received investments from Toyota Tsusho, which is a trading company, part of the Toyota Group, and EDF, the French utility. We have actually set up a joint venture with EDF called Drive that is commercializing the technology in 5 countries: UK, France, Italy, Belgium, and Germany. Through our partnership with Toyota Tsusho, we also have deployments in Japan, initially through shaping up the V2G regulatory environment in Japan, working on doing some demonstrations, but also now combining what I would call multi-purpose storage. When you have a battery inside a car, right, the primary purpose is for the car to drive you somewhere. But when the car is parked, then you can use it to do some type of grid service. And I'll give you a little bit more detail on the next slide. But we can do that with also some stationary storage. And really the idea of combining storage EVs. We always come from the EV entry point, but we also think that combining the storage is a great way to solve this problem. Just the company was founded in 2010 after I met with the professor Will at Kempton at the University of Delaware, who had been working on vehicle-to-grid technology since 1996. His thought process was pretty simple. 1996 was a previous wave of electric vehicles. He had been working on wind generation for many, many years. And, he looked at those EVs and thought, cars are parked most of the time, right? When you think about it personally, that's probably the worst investment we do in our life, right, is to buy a car. And they are parked 95% of the time, which is plenty of time to recharge an electric car. And if you put a little bit more power electronics inside that vehicle, you can make it bidirectional, meaning not just take AC from the grid, put DC into the battery, but the ability to take that DC from the battery and push it back AC to the grid. And now you have storage on wheels. And then the second step is to have an aggregation platform that is able to group those vehicles and make them look like a virtual power plant in order to access a variety of energy markets. So our mission at Nuvi is to lower the cost of electric vehicles while supporting the integration of renewable energy generation for scalable and sustainable green society. The two trends, obviously, renewable on the one side, renewable obviously requires quite a bit of storage. On the other side, the EV trend. And, I think Christian said that earlier, as a startup, we're not going to change the pace at which those things are happening. We can help them accelerate to a certain degree, but there are significant supply chain parts that have to come together in order to be able to achieve that. Fortunately, I would say we are reaching that point right now, and that puts us in a very, very good position. Now, the idea of V2G, the idea of aggregating those vehicles, as you can see here, combined with potentially stationary storage, and to then use those resources across a variety of energy markets. The energy markets are complex, they are multi-layered, right? You can go, for example, on the generation side, there are needs there to do what's called firming solar and wind, which is basically plugging the gap between the forecast, what you expect to happen, and what really happens out of those resources. So firming solar and wind is an opportunity on the generation side. At the transmission level, this is where the wholesale market is managed, right? You have RTOs, regional transmission operators, and transmission system operators, TSOs, that are managing that. They are managing the wholesale market. They are managing a set of services called ancillary services, which is basically how do you keep the grid balanced, right? How do you keep the lights on? And so with our platform, they have the ability to access those markets through this virtual power plant capability, meaning we are literally competing with gas plants or coal plants or hydro in those markets. The other piece is the distribution level, right? When you combine renewable generation, distributed generation, which is volatile, and you combine that with electric vehicles that are heavy loads at the end of a distribution system, this creates a lot of volatility on the distribution. And that volatility can be represented by looking at your peak to average ratio, right? The peak of energy can be used for a very, very narrow period of time, yet the distribution system has to be designed for those peaks. Now we are paying energy based on the kilowatt hour we are consuming, and therefore we are paying more like an average. In reality, we start to see time of use pricing, and so that's trying to drive a little bit more when we are consuming energy. But still, the distribution system is very expensive to deploy, and the ability of basically shaving those peaks out of the distribution system is very important. Optimizing the use of the distribution infrastructure is very, very important. The last piece, it's what we call behind the meter saving, right? The first three steps were really about revenue generation with those vehicles. This fourth step is about saving, either it's time of use optimization, demand charge management, right? When you have a commercial industrial site, you are not just paying for the kilowatt hour, but you're also paying for the kilowatts, the peak consumption. And so we can help shave those peaks in order to reduce the demand charge that the site is doing. So you see, to me, the idea of vehicle to grid is this very, very broad idea of being able to use electric vehicles across a large range of grid services. And that's because the value around the world is distributed in different ways, but also as we go through more and more renewable, we should expect those values to shift across the different branches of different areas of the system. So if I summarize, what we do at Nuvi is we transform electric vehicles from being an unreliable loads at the end of the distribution system, and we transform them into a reliable, dispatchable, and monetizable asset. Reliable because we're able to forecast when a vehicle is going to be there, when it's not going to be there. Dispatchable because we have the ability to control the charge rate and the discharge rate on a second-by-second basis. And monetizable because we have this virtual power plant capability that allows us to access a variety of energy markets. We help stabilize the grid through these bidirectional charging capabilities. We enable an increased level of renewable penetration. which is also solving a lot of problem, right, in terms of climate change. And all that combined, right, we generate some revenue. This is how we can help reduce the cost of ownership of electric vehicles. And so, for example, we've established a joint venture with a private equity called Stonepeak. It is called Levo Mobility. And Stonepeak has committed up to $1 billion in this. And the purpose is to own the assets, to own the vehicle, the charging station, the grid upgrades, focused on fleets, and a great entry point, which is the school buses. And I'll show you a couple of pictures on the next slide. And so the idea that V2G can help reduce the cost of ownership, we're not just talking about it, we're actually doing it ourselves and creating return for our investors through that as well. Now, there are two things that we need to do very well on top of that, right? Now, number one is the primary purpose of the vehicle is for somebody to drive it. At some point, somebody's gonna be like, I need my car, I need to drive it. Either you're a fleet driver or you're individual. And so that's always the number one priority. This can be managed in different ways through scheduling, AI integration, but also, just making sure, for example, you have a minimum amount of energy inside your car at any time during the day, as well as through the app, the ability of saying, hey, don't do any grid services right now. I've got an unplanned trip. Can you just charge the car as fast as possible? The second step, which is a question that comes up all the time, is about the battery, right? Because discharging a battery, everybody's like, oh, you might damage the battery. The truth is, even today, right, battery technology has some areas that are very resilient. Those areas are determined by what the state of charge, where are you in that state of charge, and the ambient temperature. So if you are between 50 and 70%, or even 40, 80%, the battery is extremely resilient in that area. And so you can charge and discharge, it has pretty much no impact. Now, if you go 5% state of charge and a high temperature environment, you could lose 2% of the battery capacity by just doing it once. So the platform has to be very aware, right? It's providing the transportation service, right? Making sure the vehicle are ready for the driver, while it's also delivering on the commitment to the grid. The platform has to be very aware of each battery that's inside each vehicle, and making sure we are always using the battery in the most optimum area and not creating any damage. One last example is school buses. School buses are parked 3 months in a row during the summer, which is also why people understand that school buses are a great application for V2G. But they are a great application for V2G also because if you do nothing for 3 months in a row with a battery, it's actually bad, right? You have deposition on the anode and the cathode, it's reducing the capacity of that battery. So the ability of charging, discharging while the vehicle is parked for such long period of time actually enhance the battery life. So how does it look like practically, right? A few illustrations here of different deployments that we have around the world. Here on the bottom right, this was our first customer in Denmark in 2016. September 2016, where we launched the commercial operation initially with Nissan and NL. So they've been a customer of ours for more than 5 years now, and they're actually expanding their fleets. These were what's called ENV200, which is a derivative of the Nissan Leaf. And there we are doing a grid service called frequency regulation. We are generating about $2,000 per vehicle per year by doing this service. If you look at what we share with the customer, it's about a 25% total cost of ownership reduction over the life of the vehicle. We have a few other deployments in Denmark here, those Nissan Leaf with snow on them, that's on an island called Bornholm. In Europe, we have also deployment in Spain and Portugal. We've recently announced a partnership with Wallbox. That's also, it's a charging station manufacturer that actually just went public a few days ago, I think, through a SPAC as well. And so we are working with them, bringing a platform on top of their hardware in order to address the consumer market. And then, those Toyota here that's in Japan. I talked about this deployment with our partner Toyota Tsusho, Toyota Motors, and where now we're also combining that with storage. Talking about storage, this is in Delaware. This is where the technology was born initially. Those are actually second life batteries, meaning they were initially inside Mini E's that BMW had converted many years ago. Those Mini E's actually had bidirectional capabilities. And so they actually did vehicle to grid. And then at the end of the life of the vehicle, we pulled the batteries out. We actually pulled the whole gearbox. If you look behind those white boxes, you see the gearbox that used to be inside the vehicle. We pulled all the electronics out of the car, and we are using those to as a baseline of resources to participate into the PGM market, also doing frequency regulation with those batteries. Now, I talked about the US. In Europe, we came more from the light duty vehicle. In the US, it's really the medium and heavy duty that's taking off. And school buses are really at the heart of it, right? We've announced partnership with Bluebird, which is an incumbent in that space, working with Cummins, but also with Lion, for example, which is a newcomer in that space. We're also working with BYD, which has a variety of medium heavy duty trucks. The school bus, I mean, it's very exciting to see the push that there is here to convert those school buses where it has been proven, but actually the worst place when you have an internal combustion engine school bus is actually inside the bus. So, Christian, you were talking also about health issues. It's been proven that those school buses were an issue, and for the students, and so the electrification of those school buses is really accelerating and very exciting. And by the way, for the drivers, when they switch from internal combustion engine to electric school buses, they get so excited about driving an electric car. When you start driving an electric car, you don't want to come back to internal combustion engine. So anyway, I'm going to pause here. I hope this gives you a picture of what we are doing.
Absolutely. Thank you, Gregory. And, I'm really curious seeing Namibia and the Philippines up there as well. And the question I have for you is, and starting to connect the dots, between what Christian and Gabriella were talking about. I mean, what are the minimum requirements to implement your solution? And, is it implementable everywhere? It seems to be from your slide, but we'd love to hear about that.
Yeah, a few words about the Namibia actually is an interesting one. We've been working with the United Nations Development Program. And so those vehicles were deployed at the UNDP office in Namibia. And we're developing a great relationship with them. And in terms of minimum capacity to participate in the market, they, many years ago, they were pretty high, maybe 1 or 5 megawatts. But as markets are going more and more distributed, they can handle smaller and smaller pieces. And so, for example, frequency regulation in Denmark, it's 100 kilowatts. That's it, 10 vehicles. Those Frederickson Forsyning vehicles are enough to participate into the market. The regulators are understanding how critical it is to have smaller pieces that are contributing globally to keeping the system up and running. And so very often, you don't need much. Now, if you try to solve bigger problem, obviously you need to have more capacity, which is why combining EVs with storage can make sense. Here, one of the big issues we are facing is public safety power shutoffs in California. And so in this case, you need to be able to have capacity, but you also need to be able to move that capacity even when the grid is down, which is also a great application for those vehicles.
I'm on mute. Thank you very much, Gregory. Really, again, fantastic solution. And I'm curious, Christian, from your work in the urban environment, your investments in the urban environment, how do you see, the types of solution that Gregory was talking about really fitting into that broader climate mix?
I think he had in one of the first slides, actually vehicle to grid is something that I've been looking at from afar, and I need to dig more into it, right? But I think he had a bullet in one of the first slides that talked about effectively a power plant in every vehicle. And as we have, there we are, that one. And as we have all these EVs rolling out, actually, my joke always is, what would Norway do? Norway is about to hit 100% electric vehicles, right? And then what problems come from being a 100% electric vehicle? Well, first problem is there's not enough charge points on a Friday afternoon for you to drive your car to your cottage. Luckily, Norway is mostly renewable electricity, but if that was the UK, a lot of it would be coming from coal, as we talked about before. And now you have this massive stock of batteries just being used. What's the average use, Gregory, of a vehicle in the US? Something like less than 15%?
Yeah, I mean, it's for the day. I mean, in average, a vehicle, they're parked 96%.
Yeah, so it's like So you have this really expensive asset, the battery, that could actually provide some grid balancing. The question that I have as an EV owner myself is, don't I violate the policy with Tesla if I actually start powering the grid from my vehicle? So that's gonna have to change, right?
Yeah. I mean, the battery. No, that's why we are really entering in the fleet side initially, right? And that's because the vehicles have a higher probability of being parked at any time during. We know that better. Now, yeah, you need to work with the OEMs, right, in order to make sure you're not voiding the warranty. Now, there are countries, for example, Denmark, where the OEM actually, if the vehicle has the possibility of discharging, there are consumer protection laws that are saying then the consumer can use that vehicle to do that. So it really depends locally what are the rules and regulations also, to do that. The coming back to Norway, I think what's interesting in Norway is that, yes, they have tons of renewable. They are, 99% of their energy is generated through hydro. Now, because the level of EVs is so high and the fact that EVs unplugging, plugging is shifting so fast, and they actually have to bring more storage in order to respond faster to those shifts in their grid. And so that initially they had no problem with it, but this has now been more and more of a problem also in how EVs can unbalance the grid, and how the transformation is more impactful than we think at times.
I think there's one interesting example to add here. The Ford 150, the pickup truck, Sunrun is has the exclusive rights to install that bidirectional pickup and it's a very popular pickup in the US, and it's a pretty sizable battery, makes a huge difference, and the orders went through the roof after the blackout in Texas in February, right? So it's happening, and that vehicle, if it's powered by a house that has a Sunrun solar rooftop, and if that system is designed properly, right, and that house is pretty much self-sufficient, that car is 100% renewable energy charged and powered, right? So the delta on the emissions and the potential avoided emissions is very material. So you're solving so many problems in one go. And again, it's not theoretical. Ford designed that large electric vehicle pickup for the US market with the intention of making it bidirectional to begin with. Again, it's not a concept, it's in place.
Absolutely.
Thank you. I'm getting the virtual nod from our organizers to wrap up as we're going a little over time. But I think because of the interesting solutions we have on the table. So I want to say thank you very much to our panelists. Thank you to Wharton for allowing us, and I think it's really exciting to hear about all of the movement in investments and in innovations in the climate sectors. Over to you, Amanda, for the closing.
Thanks so much, Cheryl. And thanks again to Christian, Gabriella, and Gregory. It was a fascinating discussion. I feel so bad having to cut it short. I think I could keep going for a while. And of course, thanks to our audience for an engaging conversation. Panelists, if you're able to stay on and answer any of the remaining questions in the Q&A, please do so. Keep the conversation going a little bit there. In the meantime, though, I'm going to transition to our next speaker, who is Dr. Carolyn Kuski. She's the Executive Director of the Wharton Risk Management and Decision Processes Center at the University of Pennsylvania. Also there, she directs the Policy Incubator. Dr. Kuski's research examines multiple aspects of disaster insurance markets, disaster finance, climate risk management, and policies for increasing resilience. She's published numerous articles, reports, and book chapters on the economics and policies of climate risk and disaster insurance markets, and is routinely cited in media outlets, including NPR, the New York Times, and the Financial Times, amongst many others. She's the recipient of the 2013 Tartufari International Prize, and she's the vice chair of the California Climate Insurance Working Group, a university fellow at Resources for the Future, and a non-resident scholar at the Insurance Information Institute, as well as a member on the Roundtable on Risk and Resilience of Extreme Events at the National Academies of Sciences, Engineering, and Medicine. She has a BS in Earth Systems from Stanford and a PhD in Public Policy from Harvard University. Dr. Kuski, I'll hand it over to you to give us some wise words.
Thanks, Amanda. That was a kind introduction. And I'm just going to tell you a little bit about some work at the center just to wrap up in the last few minutes. Are these coming through? These slides coming through okay?
Yes, you're not on present mode, but there, now you are. Perfect.
There we go. Great. Yeah, thank you. I really just want to start by saying thank you so much to all the organizers and all the speakers this week. This has just been a fantastic lineup of incredibly engaging and insightful conversations, and everyone at our center has really loved being able to work with all the organizers of this event. And I hope that this is just the start of further collaborations. So as we close now, I was just going to take a few minutes to tell you a bit more about climate work at the Wharton Risk Center in the hopes of furthering those future engagements and partnerships with everyone who's been participating and listening all this week. So I'll just do this in just a couple minutes and then let everyone obviously go. So the Wharton Risk Center has been around for over 35 years, doing a range of work on risk management, risk finance, and risk communication. Our research is currently grouped into these 5 research labs. And while climate is a very central theme, obviously, to our business climate and environment lab, as you probably heard about from Professor Arthur Van Bentham, one of the faculty leads, it's also popping up in all the other labs too, right? Climate touches almost everything. So we have work on managing the physical impacts of climate change in our disaster risk management lab, helping both the private and public sector in addressing climate extremes and financing the needed changes. We have research on communicating climate risk and how people perceive climate change. We have scholars looking at issues from climate migration to the impacts of sea level rise on housing and mortgage markets. And that's just a sampling. But as you can see, as the importance of climate is growing at Wharton, our center is now actively working to reimagine and expand all aspects of our work, including these labs, to provide deeper and broader exploration of climate and sustainability related topics. So as we develop these new efforts at the center, I'd like to invite every all the students and alumni listening, and thank you to those of you who've already been in conversations with us, you know who you are, to help us put together and achieve that vision over the coming months and in the next few years. This is just a few examples of the types of climate work that's been happening at the center. We solicited solutions to climate risks from across the university. We put out a range of primers, issue briefs, blogs, reports on a whole bunch of different topics. Here's just an example of one recently on climate disclosures. Our primer series is designed for students and policymakers as introductions to topics. We have lots of events and that highlight climate topics. So for example, recently we had this Wharton Climate Prof event that highlighted the research of 10 faculty at Wharton working on climate topics. Those videos are now on our website. We had a webinar series this summer on a more niche topic of the intersection of climate change and insurance. And there's much more research, of course, going on around the school. And I know you've already heard about some of it. In addition to our research, the second big pillar of work at the center is our student engagement activities. And as everyone listening knows, there's been sort of exploding interest among students in climate and sustainability topics more broadly. And so we've been trying to develop programming to meet their needs and interests. We're in the second year of an undergraduate student fellows program that focuses heavily on climate. The center also helps manage and provide information on the Wharton major in business, energy, environment, and sustainability, which has also seen incredible growth over the last couple of years. We provide grant support to PhD students that were working on related topics. We have a student listserv where we share information on climate events and opportunities. And so as we try to develop these existing engagement with our students and other opportunities, we'd love to continue to work especially with alumni and to help connect students with alum as current students start to chart their career path in this area as well. And then the third pillar of work at the center beyond our research and student activities is our public policy work. And a lot of that happens in our policy incubator, which is set up like a business incubator, but to help and develop new and innovative public policies. If anyone's interested in that line of work, please reach out to me and I'd be happy to give you more detail on our projects and activities in the policy space. And then, of course, the work of our center is made possible thanks to these incredible sponsors and partnerships we have. So we owe a huge thank you to everyone on this slide for supporting our work and collaborating with us. And then I just want to end by welcoming you all to attend the next big event we have on our agenda this semester, which is our annual workshop, which will be virtual again this year, so easy for everyone to attend no matter where you are. It'll be on December 3rd. It's on climate change and the transition to a carbon-free economy, managing risks and harnessing opportunities. And we're pleased to say that several alum have agreed to speak on panels and give a keynote. And I think this should be a really fantastic event on these 4 different panel topics you see here that will be engaging researchers and students at Wharton with alum and private sector partners. So if you go to that website, you'll see the registration link. So we hope to see many of you back there. And that's all. I just really look forward to working with everyone more. And thank you so much for the opportunity and this amazing week.
Thank you so much, Carolyn. Really appreciate your kind words. And it's, I think it really wraps up the beginning of the week. We started with climate adaptation and talking about how at least 85% of the planet is already impacted by climate change. And we talked about themes on the importance of data and those types of things, and then the opportunities. But there, that policy and that data, that all has to come in together. And so it's great to see Wharton as a proud alum. I'm happy to see all of the research and thought leadership that you're leading up there, and certainly look forward to following your work, attending that event, and using some of your materials in the work that I do as well. So thank you very much, and thanks to you and your team for the collaboration. But I won't steal our final speaker's thunder on the thanks. Our final speaker is Dr. Sumitra Das, who organized the entire conference. Sumitra is the president of the Healthy Climate Initiative, a nonprofit committed to restoring climate and making it healthy for future generations. His current efforts include creating awareness of climate change, mission accomplished here, I think, stopping the melt of the Himalayan glaciers, maybe a harder challenge, and reforestation the Sundarbans in India. He also worked in the Fortune 500 companies such as Motorola, Corning, Lucent, and Philips Electronics, as well as AT&T, and has published numerous papers and spoken at many academic and industry conferences. He holds an MBA from Wharton and a PhD in electrical engineering from George Mason. And his motto in life is to leave this world a little better than you found it. Before I hand it over to him, I wanted to give my personal thanks to you, Sumitra, and give you a virtual hand for the tremendous work that you've done to bringing together this 4-day virtual conference with a fabulous range of speakers. So fantastic work, and over to you to close us out.
Thank you, Amanda, for the kind introduction. And good afternoon to everyone. I'm Soumitra Das. As you heard, I am president of Healthy Climate Initiative, a Wharton graduate, the coordinator for this event. It is my privilege and honor to conclude the conference and deliver a vote of thanks on behalf of the Wharton Club of National Capital Region. Over the last 4 days, we had engaging discussions examining various topics of climate change. We learned the challenges as well as the opportunities associated with climate change. The conference is made possible by the support of the members of the Wharton Club of the National Capital Region, Wharton Energy Network, Wharton Risk Center, and several Wharton alums who worked tirelessly behind the scenes to make this conference a success. First, I would like to thank the Wharton Risk Center, Wharton Energy Network, and ColumbiaDC for co-hosting the conference. I'd like to express my heartfelt thanks to the speakers, moderators, and MCs who took the time from their busy life to educate us on various aspects of climate change. I would also like to thank the audience for participating in the discussion and making it alive. I'm grateful to Mackenzie Harper, president of the Wharton Club of National Capital Region, the board, and Luca Zerbini, former president of the Wharton Club of the National Capital Region, for their full support to organize the conference. I'd like to express my gratitude to my fellow Wharton alums, Luca Zerbini, Amanda Longsdale, Sid Radhakrishna, Warren Wang, Gabriele Herculano, Laura Bernard-Shane, Joe Andronaco, Kevin Dowdle for their help with selecting and inviting the speakers and moderators for the conference. I owe a big thank you to Helen Wiley of the Wharton Conference Center. Helen has supported me from the concept to the execution of this conference. The event would not have been possible without her support. I also owe a big thanks to Carol and Zoe for the Wharton Risk Center, who worked tirelessly in setting up the Wharton web page, Zoom platform, and technologies that go behind the scene. Thank you, everyone, for taking the time to be here. I'm so grateful for this opportunity. Have a great rest of the week. Thank you.
Thanks, everyone. Thanks for joining the conference, and look forward to staying in touch and staying connected. Thank you.